So let's get started with the first phase, setting up the structure and reading in client's actuals and plan. And the first thing we need to do here is to build the setup and config tabs, which are especially important to structure the income statement and balance sheet, and as usual, set up some technical constants. So here we are in the Excel model. We are on the setup tab, and as I previously just showed, this contains the income statement and the balance sheet. And well, below here we have for the working capital, the KPIs. We have those deltas for the net working capital. We have the two blocks for balancing the balance sheet. So here the generalization for delta net balance sheet, and down here for the net income part. And the first thing we need to do now is to actually get from the final version this structure, and then I will show you how to build the formulas. We have this block here on the left hand side which aggregates this monthly timeline over here, and then we have this monthly timeline here, which, as it is a setup tab, doesn't contain that much stuff, so it's primarily about those sums. So I think I will go over this rather quickly. There are some line items in here though that are special, so as you know, if something is red, we should always watch out for that. And that is because, for example, here we have those inventories which are planned based on the working capital KPI. Here the trade receivables also from working capital. We have the cash and equivalents as used in the balancing. Deficit not covered by equity, I also explained that. And we'll down here on the liabilities and equity side some other things that are special. Now, how would you do this in a real project if you were to put together the income statement and balance sheet items? What you would usually do is that you would get the most recent annual reports, so from the last 2 or 3 years, and then you would just check, what's in there. And usually you would find that the main part contains a rather aggregated view, which is not that useful as it's not fine-grained enough. But there's most of the time also an appendix which contains some more detail, if you're lucky, even the accounts. So that's the source. Other than that, it's a good idea to ask for an export from the ERP system to see what's in there. And it just takes a bit of time. You need to fine-tune that. Also make sure that these categories go along together with what you want to plan in the future, which is just really important because, if you introduce new sales categories, for example, then you should make sure that, these are included as well, and you will not know these from the historic annual reports. Sometimes it just happens that you need to change the structure later, and that's always a bit of a mess. But what you can do is, for example, work with 1, 2, or 3 placeholder items down here. For example, in the other operating expenses, it's quite common that there's usually some item that you forget or that comes up from somewhere. So it makes sense to go with placeholder items. As a last resort, you can always use the other item. That's, by the way, also the reason why we use those IDs over here. Because, as you can see here, we also got another item up there. And we want to uniquely identify these, which is why we need those IDs. If you really want to change those items now, what you can do is do it here in the Setup tab technically, because what we want to do later is to always look these up. So for example, here on the interface tab, you can see that this line item sales is looked up based on that ID, and it's just the same over here and down there and so on. So actually throughout the entire model, I'm using lookups for the line item names, and this is providing for some more flexibility in case we wanted to change something. We can change those hard values over here. So here we have our future business plan actually, and as you can see, it's still an empty workbook. So let's get started and do some basic stuff. I will just change this to Arial 8PT. Let's remove those grid lines. Let's change the page layout to blue 2. So we got the colors right. And now, I can move over to the final version, move to the very last cell that's been edited, and start selecting all of this. So it's a bit easier. Let's just copy the formats. Let's just copy the formulas, and let's copy the column widths. So now we get this. Let's make this 20 pixels as usual. Let's move to this cell, press Alt WFF to fix this. Let's rename this tab to just Setup. Let's change the tab color to true black, so 000 is fine. Now we get this, and well, now we can start going through formulas, and I will explain to you what's happening. So this is just kind of a sum-if statement. Over here we have this annual aggregation, and just what we need here is the sales from 2021. So it goes over here in the monthly timeline, and what it is doing is that it's checking the year of this, which is 2021, against this line vector over here in red. It calculates the year from these values, checks if the year in here is 2021, and if that's the case, it returns true, otherwise it returns false. So as you know from the short-term liquidity we use, this is just a way to produce zeros or ones in case the condition is true. And in this case, we will multiply with the respective monthly sales value down here. And if we sum this whole array up, well, then we just get what kind of a sum-if statement would give us here for the sales on the yearly basis. Now, you may be wondering why actually I'm not using a sum-ifs formula for this. So let me just show you why I don't do this. Suppose we were supposed to sum up, well, these values here. And, well, our criteria range would be the year of these. And our criterion would be, well, the year of this. So it should actually just work out like this, right? So that's our sum range. That's the criteria range. So here the red one, but we just want the year. And then finally, what we want to have in that criteria range is just the year from this. So although I made sure to get the parentheses right here, so there's really nothing wrong with this formula. Let's hit enter. And it says there's a problem with that formula. And it just turns out that for some reason, sum-ifs doesn't like this year transformation here, for example. And I don't really know why it's the case, but it's just much easier in this case to go with something like this. So as usual, you can express pretty much everything that the more complex formulas like sum-ifs or something like that are doing in some other way by coming up with a Boolean condition like this and then multiplying. So technically it's a dot product, if you know that. So that's why I do it like this here. It's not because I want to make it complex or fancy or anything. It's just that sum-ifs doesn't do it. Other than that, well, this formula is also in here and over here and so on. So it is just the same. Let's go with the total output. That's just a sum. Also over here, this is nothing special. Here, material, services, same formula as before. Then this is just a sum. This is the sum of these two. Other operating revenue and so on. Well, it's really always just the same. There's nothing special in here. It gets a bit different when we build, I think it's on the PB or beta later. We need to pay attention a bit more when we do the opening balances down the balance sheet. But as such, this is really just standard and summing up conditionally and well on the vertical axis summing up so that we got all these aggregated. Another thing that I should point out in the income statement is that we go with positive numbers for what's coming in. Well, so that's, for example, the sales. And we go with negative numbers for the cost items. So, for example, material. This then leads to us only working with sums for these aggregations. So you will never see a minus sign in here. The reason for that is that, well, gross trading profit is not the best example because it's actually, well, total output, which is typically positive, and material and services, which are typically negative. So that's already a crunched number, but let's assume it's positive. Other operating revenue is usually positive as well. Personal expenses usually negative. Other operating expenses usually negative. and we just sum this up. So it's not like this plus this minus this minus this, but it's just a sum across all of these. Well, and here let me highlight again that cross-trading profit is not naturally positive. Other than that, we have those two red line items up here and this one down here. So as you know from the slide, interest income and expenses as well as income taxes are a bit special because the interests, well, they are linked to what we get in the balance sheet, current accounts and bank loans. And well, the income taxes, we just pay them on an annual base. So this is just, well, working out differently as opposed to the other items here. So we need to take special care of that, and that's why I highlighted them in red. Let's move on to the balance sheet. And here the first thing to note is that we no longer have those sum statements, but we have those index match statements. And this is something actually it quite happens a lot in projects. You build this and then you take these and copy these all the way down here in the income statement. And well, then in the balance sheet, make sure not to use those sum formulas from up here, okay? So here, because well, the balance sheet is showing points in time and not inflow, kind of, we need to just look up values here respectively for the end of the year. And that's why we have these index match statements here, very basic. There are some special cases here, like mentioned before. So for the opening balance, for example, we need a different formula in the very first year because we have no opening balance that we could get from the year before. But this is just a technical side note. What's more important is that here for these from balancing items, we use the same sum formula as we use over here in the income statement. So this is an exception that's really important. And the reason for that is, well, it's not a traditional balance sheet item. It just works differently, and we need to naturally aggregate all the balancing from the respective year, from the monthly timeline here to the annual timeline. And that's why we need those sum statements here. Let's go a bit further down here. I think that's already it for the assets. So as usual, here we have those sums, and for these subsections, sums again, so nothing special. Down here, well, the liabilities and equity really just work the same technically, index match as usual. Here, opening balance, special case in the first year from balancing stuff with sums. And also here for the equity part, this just works the same. Note here that, well, equity after balancing here is also a bit special, but this is better explained over here on the monthly timeline, because here on the yearly timeline, it's really not special at all then. And well, that's already it for the balance sheet. Please always make sure to ensure that assets and liabilities and equity equal. So that's why we need the check here. Checks are usually then aggregated then here over on the left. So I'm going with absolute values for that because I don't want positive and negative values to cancel out. And the check then here is just aggregated once more over here in A2. So this is just the sum of all the aggregated checks. And you may remember the Setup from the business plan here. Let's just go there. Here is where I'm aggregating all those checks from cell A2 and, well, totaling them here, bringing them over here, and then again having here this master check. So back on the setup tab, let's scroll down a bit. Well, here we get those KPIs and, well, the balancing stuff, but I think this is really just explained better if I can give you numerical examples. So I will not do this here. Technically, it's implemented here because it's a template, but I will show you how to build this when we read in some numbers. And that's already almost it for the setup tab. One more thing though, you may have noted that in here we get those constants and I didn't set them up yet in this workbook. So just to explain start integration, well, this is just saying that we start with the integration because we start with the planning beginning of 2024. So January 2024 will be the first month where, well, we will do the balancing, for example, or especially really. So this is why I have this. It has implications when we read in the data. So when we read in the actuals, we do not want to do some stuff like, for example, balancing. So that's why we need this. So technically, this is just a date. So it's some 45,000, and you already know that it's, well, a date around our time. Here in this part, we also have this, well, CI days working capital, which is just some 30. That's the period length. So as we are working here on a monthly timeline, 1 month is 30 days, let's say, as an assumption. And that's why we use this. And you can also already see this over here in the name manager. So these are now linked to the source file actually, which is not a good thing, but this just happened as I copied the formulas to set this up. So what we will do is we will just, well, build this config tab ourselves now, and then that's already it for the first part. So you may remember the PowerPoint slide, this one, and here the first item was setup and config. So let's just set up the config tab, and then we're done with the first step. So let's just get this template as well from the final version. Note that here I'm not only using 2 columns as placeholder or 4 IDs or stuff like that, but 3. It's because the business plan model is a bit more complex and 2 wouldn't suffice. So I will just get this, and well, we need a new tab, config tab. It's also supposed to be just, well, black. Let's do the basic formatting. Arial 8PT, and I should, well, remove those grid lines. And now I can, well, paste the columns, paste the, well, values in this case, paste the formats, and now we have this. Let's make this 20 pixels again so it's consistent. And well, now we can go through these. I'll just explain shortly what each of these mean. This one you already know from short-term liquidity, it just converts euro to K euro. We have this standard NA value just to make things consistent. We have the integration start. So this is the first month that we are planning. So January 2024. We have this, well, empty placeholder. Usually it's just something like this. I think it doesn't copy properly because it's, well, empty by definition. Then we have the period length from the working capital planning. So that's just a month, so 30 days. DAO plan, DSO, and DPO plan, that's the target KPIs. So I will explain this content-wise later. So now these numbers don't make sense, but well, these are our target values. We have the tax rate. These are some 30%, which is, well, a common assumption as a tax rate. If you do not want to go into the details, is at least working out in Germany might be a bit more or less in other places around the world. And we have the tax month. So the tax month is just saying that in the income statement, we only want to calculate taxes in December because, well, this just happens to be the financial year. So January through December, and it's actually a coincidence. So it could as well be the case that your financial year is starting in July or something like that. And in that case, you would have 6 here because you would calculate the taxes for the previous financial year in June. So make sure to get that right. And here we have the liquidity buffer. This is also coming from the liquidity model more, but we will also use it in, well, midterm liquidity and financing. So before we define these, let me just go to the, well, name manager and delete all these. So let's do it like this. And then, well, I just need to go one by one through these. Don't think I need to show you how to do this. You know the drill. So like this, I will fast forward this. So here we go. I just set all these up. Let's go to the name manager and see, well, here they are. So that's this. And now we should also be able to go to the setup tab and we'll see if this is still working out. Seems to be the case. So that's working. We do not get any errors here. Looking good so far. Okay. Well, and that's already it for the first part. So we just set up the Setup tab and the Config tab to really base modules, but just as important, we will use the Setup tab as a template throughout the entire model, which is why it's so important. And as a next step, we will read in the client's actuals and plan data.